Welcome to our weekly Forex market analysis call. And this is in preparation for trading on or for the week of May 29th to June the 1st, 2018. Just a quick disclaimer before we get started. This is for educational purposes only and is not intended to be individual investment advice. And if you need individual investment advice, I recommend you talk to your investment advisor. All right, so let's go on to our Forex Factory calendar now, and we will get started with our analysis. So this week, I think I got my dates a little wrong, so we'll take a look at this week here. Where are we? That's not correct. All right, so starting off here, we have bank holiday. Okay, US, UK bank holiday here. So tomorrow, holiday coming up on Tuesday. We have consumer confidence numbers, so this will be important for the US dollar. We also have Reserve Bank of New Zealand financial stability report. So anytime there is a Reserve Bank announcement or the central bank announcement, that is very important. So we do need to keep that in mind. How's the audio for everyone? Can you guys hear me okay? Okay, so audio is good. So there may be a problem at your end there, Felix. I would check the audio there. All right, so it looks like our audio is good. So let's dive in here. Anytime there's a central bank, we have to be very, very careful with that because the monetary policies are changing now for the central banks. And as they change, they tend to have a lot of impact on the markets, and the markets will be expecting changes. And as a result, it creates that negative or positive sentiments. Whether the central bank meets expectations, that will create a positive sentiment. And if they don't do anything, if they don't, if they talk about the economic growth not being in line with what they were looking for, that type of stuff, that will have a negative impact. So keep that in mind. We also have Bank of Japan, Governor Kuroda speaking. We have seen with all the different stuff going on last week or the last couple of weeks, we have had President Trump. There was first they were going to meet with North Korea, or US was going to meet with North Korea, and then President Trump released a statement that they are not going to meet with Korea, and then later on there was some sort of communication saying maybe there will be a summit. And then over the weekend, we have seen that North Korea and South Korea were actually talking once again. So there's a lot of uncertainty. So when these political things are going on in the market or in the world, it creates uncertainty in the market. So if North Korea and South Korea are talking, that is good, which means Japanese yen will actually drop and all the Japanese yen crosses will go up. Whereas when we hear comments like US not meeting with Korea, or North Korea and South Korea not talking, the talks falling apart, that will have that creates a risk-off environment, and in that case, the stock market drops, and then Japanese yen and Swiss franc, gold, these type of safe assets will go up. So that's why it's very important right now to keep an eye out for what's going on in terms of news, because it will drive what we do. So keep that in mind. And then Japan has to be concerned about the currency, because when Japanese yen becomes more expensive, it impacts Japan's exports, and exports are very, very important for Japan because it is such a big exporting economy. So just keep that in mind. So Bank of Japan can actually do verbal intervention, and by that what I mean is that they may say things that will actually drive the price of Japanese yen down. So always keep that in mind. Japan is very, very concerned about their currency. and they can make comments that could drive weakness in Japanese yen. So just keep that in mind. And then we have Reserve Bank of New Zealand Governor Orr speaking again, very important. So keep an eye out on that. On Wednesday, we have ADP non-farm employment. So we are into that week here. So we have non-farm, we have preliminary GDP, which will have an impact on the US, especially if it comes below expectations. And then we have another central bank here, Bank of Canada rate statement. So right now, we are not expecting Bank of Canada to raise rates. There are a lot of stuff going on in terms of NAFTA talks have not yielded anything at this point. And from the economic point of view, oil has gone up, but it dropped last week. Other than that, things haven't really changed. Their stance right now is neutral, so we're not expecting an interest rate hike. But again, what they say about the economy will have an impact. Any positive statement about the economy, about economic growth, will lead the Canadian dollar to go up. Whereas if they have their stance is a little bit negative, or they're not so bullish on the economy, that will have a negative impact on Canadian dollar. So again, keep that in mind. Swiss National Bank Chairman Jordan speaking here. Again, Swiss franc is another currency that tends to go up when there's uncertainty in the market. So again, central bankers can say things that can have the opposite impact on the currency. So just be aware of that. And then for New Zealand, we have business confidence number. Again, very important number to keep track of. Private capital expenditure for Australia, that will be important. On Thursday, we have GDP for Canada. So that will be important. And then these Chicago PMI and pending home sales numbers are also important, especially after the big financial crash we saw, or the housing market crash we saw back in 2008, 2009. Since then, these housing numbers are important to pay attention to. Okay, finally, the big one on Friday here will be the non-farm employment numbers. They're always market movers. So we do have to keep that in mind. PMI numbers tend to be important because they are leading indicators for retail sales and then leading to GDP and stuff as well. So manufacturing PMI numbers here and these PMI numbers out of the Eurozone will also be important. And then we have PMI numbers for the US as well. But by far, the non-farm employment numbers here will be the biggest market movers on Friday. So let's go on to the charts now. We'll start off with Euro US dollar here. So for the last several weeks here, we have seen a Euro dollar drop, and now we are coming into these lowered levels here. So there's still room for this one to move lower. So now keep in mind that we have been dropping for a number of weeks. And what that means is that things could slow down or even reverse now. So we need to keep that in mind. So here we have a bearish candle close for the week. So it's looking still bearish. We close right into the bottom of the candle. So there's still pressure to the downside. So with this one, my bias is to the downside. I'm looking for price to come down into 1.1550 level, back into the bottom here. And now we are coming into, even prior to that, we are coming into some support and resistance areas right into 1.1620 level, and then 1550 will be the second target to the downside. So in this case, we could see price either push up higher like that and then drop, or we can even see pullback all the way into the 1715 level. So we have to be mindful of both of these. So this level here, 1.1715, is an important level. So we could see price push up into that level before it drops again. So the bias for euro dollar is to the downside. First target 1620, 1.1620. Second target 1.1550 level to the downside. Euro dollar here. Euro dollar, we have seen last week we were looking for a drop. So same thing with the euro as well. Last week we were looking for a drop. We talked about pullback and it has dropped further. So same thing here as well. We had a bearish candle close last week for pound dollar and we were looking for a drop. So we did get that drop. We are into that next level now. So that's a nice bearish candle here. So looking for a further drop here as well. So with this one, we could... let me see, where are we? So we could see a pullback into this 1.3350 level and then a further drop. Bias is bearish for pound dollar and first target is 1.3220 and then 1.3050 will be the second target to the downside. So I am looking for a potential pullback into 1.3350 and then a drop into 1.3220 and then further into 1.3050 level to the downside. So bearish for that. With Aussie here, it's interesting. We have seen price push back higher into the support and resistance here, and now we are starting to see price have trouble with this. So we had a bearish candle close here on Friday. So from the weekly perspective, we do have that pin on top, and as a result of that, we could see price drop from there. So pins show rejection. So at this point, I'm looking for price to drop here. However, we could see a retest of that level. So here I would be looking for price to, so we could see price push back here, again, do a retest of that and then drop further. And if that level breaks, then I will be looking for price to fall once again. So a potential pullback into 0.7600 level. And if it holds below that, then I'm looking for target here would be 0.75 and then 0.7420 level. Those will be the targets to the downside, but my bias is bearish on Aussie dollar. New Zealand dollar here, this one as well has been trading in this bit of a range here. The whole week price hasn't really gone anywhere. So with this one, I would be, my bias is bearish as well. So it looks like price went and tested the high, but has failed to break the high. So it hasn't gone to the other side. So we could get another retest of that level. But overall, I'm looking for a drop. So I'm looking for a retest of potentially 0.6980 level and then a drop. First target is 0.6850 level. And then if it drops further, second target would be 6780. So 0.6780 will be the second target to the downside. Bias is bearish for New Zealand dollar. Dollar CAD here, it had been trading in this range for the last couple of weeks. Now it has broken that range. It's gone to the upside here. So testing that high, it looks bullish at the moment, especially with the drop in oil. So if you take a look at oil here, oil has dropped a lot over the last couple of days. And the reason oil dropped, or the last few days, I should say, the reason oil dropped was because it was the speculation that was driving oil up because US pulled out of the nuclear war deal. And as a result of them pulling out, there was big concern that we would have shortfall of oil. And as a result, because of speculation, oil prices went up. Even though right now we have lots of oil, we have lots of inventories of oil, so we don't really have any kind of shortage at this point. However, they were talking about shortages like later in the fourth quarter and down into 2019. That's when the shortages would actually show up. But we saw on Friday, I think it was, or Thursday, something like that. So last week, I should say, we heard from OPEC and Russia had a meeting, and they said that they would be willing to increase the production of oil should there be a concern. And as a result of them, because before they were not really talking about increasing the production, they had been all this time, they've been talking about cutting production and making sure those quotas are in place and that type of stuff. But now they have started talking about increasing production. So when they increase production, there is no concern for oil shortages. And as a result of that, oil has dropped. It has dropped sharply this week. That's a big bearish engulfing candle. So kind of like this, right? So we had a big candle here. It could continue lower. Now that's the concern, because if oil drops, Canadian dollar will drop as well, which means dollar CAD will go up. So that's the interrelationship between oil and Canadian dollar. So let's take a look here. So we have bearish engulfing candle close in oil, and we have a bullish candle close in dollar CAD. So they are opposite. They move in opposite direction to each other. So with this one here, the bias is bullish. We are into resistance here. So keep that in mind. We had trouble, our price had trouble at this level previously. But now that we are closing like this, my bias is bullish. Now we do need to see the price close on the other side of this 1.30 level. But once it does, the next target is 1.3140. And then it could move higher into 1.3280 level here. So those are the two targets to the upside, but we do need to see a break above here. And once price breaks and holds above, I'm looking for price to move higher. 1.3130 as the first target, 1.3280 as the second target to the upside. This one here, euro pound, hasn't really done much. It's just traded in this range. So if you take a look here, last couple of weeks, it's just been trading in this range. We do see there's a bit of a downtrend line here. So we have seen we've seen this dropping a bit last couple of days, last 3 days. It's just been very, very neutral. So we could see a drop like this, a retest of the trend line, and then a drop to the downside. So the bias for this one here from weekly perspective still stays to the downside. We have seen a pullback here. We do need to see a break of this 87.20 level. Once it does, the bias is to the downside. And the next target here would be 86.20 level to the downside. So very, very small sideways moves in euro pound, nothing substantial here. Just looking for a drop back into this next support and resistance level here. So bias is bearish, which means euro is likely to drop more than British pound. So if you're looking to trade those against the other currencies, just keep that in mind. Swiss franc here. Swiss franc and Japanese yen, like I talked about, they are safe haven currencies. Usually we haven't seen Euro Swiss move a lot, but over the last few days, it has, just because of the uncertainty over the nuclear war deal, and then also in regards to the Koreas, right? US or President Trump put out a letter last week saying there will be no summit. And as a result of that, we have seen Swiss franc go up and Japanese yen go up, which means the crosses drop when that happens. And that's why over the last 2 weeks, we have seen some really big drops in these Swiss franc currencies, our pairs, and then nothing much was happening here, and now we're seeing this huge drop. So bias is bearish for this, but do keep in mind when we get huge drops like this, market can pull back because these are sentiment-driven because they're sentiment-driven moves. When sentiment changes, and it can change pretty rapidly. So let's say if North Korea and South Korea are willing to talk again and US meets with Korea as well, that will be positive for the markets, and we could see a reversal of these moves. So keep your eye on the sentiment, see what kind of news is coming out or comments are coming out, because that will drive these moves. Overall, though, just from technical perspective, not considering sentiment, this is bearish, and I would look for a pullback into 1.1580 level, and I'm looking for a drop to the next level at 1.1450 level to the downside. So my bias is bearish on Euro Swiss. Same thing here with Pound Swiss as well. We were bearish on this, but with the market being the way it is, being driven by sentiment, it has dropped a fair bit. And now I'm looking for a further drop. That's a very bearish candle. It closes right into the bottom here. Hasn't there's not even a tiny little bit of pin on the bottom, not even like this. But like I said, when the market sentiment changes, this can reverse on a dime. So just keep that in mind. But right now, this candle here looks like this candle, right? So I'm expecting a further drop. Bias is to the downside. 1.2850 will be the target to the downside. But like I said, this could pull back because it is a big drop. We could see a pullback like that and then a drop further down. So just keep that in mind. Bias is to the downside. And the targets would be, the first target would be 1.3020 level. Second target would be 1.2850 level to the downside. So bearish for pound Swiss. Dollar Swiss here has been moving down as well. Last week we were looking for a drop. We got that drop. So now we could see a pullback into 99.20. So bias is bearish. For dollar Swiss here, bias is bearish. I'm looking for pullback either into 99.20 area, or we could get a higher pullback into 99.50 and then a further drop into 98.50 level to the downside. So bearish bias for this. Second target to the downside will be 0.9800. So again, bearish bias. Pound CAD here. This one is interesting because Canadian dollar has pulled back. So we did see a drop here. Now, we could see a retest of this 1.7380 level and then a further drop. So I think that is likely. Now, if the price breaks up to the upside here, breaks above 1.7380, we are likely to see the price go higher. And the reason for that is what's going on with oil and dollar CAD. So if dollar CAD goes up, this is likely to go up as well, just because Canadian dollar may be dropping with oil if oil continues to drop. So that will be the concern. So I would look for a pullback into 1.7380 level. If it holds above, then I'm looking for price to go higher into 1.7580. If it holds below 1.7380, then I'm looking for price to drop further. And I'm looking for a retest of the low here into 1.7120 level to the downside. So right now, the bias for me would be neutral because we need to see what's going on from sentiment perspective and from oil. So in this case, both of these options are available depending on how market reacts. All right, so this one is EuroCAD. So same thing here. We have a large pin to the downside, just like this one, right? See what happened, price moved higher. So I would look for a retest of potentially into 1.5050 level. But this pin here suggests that price could move higher. So looking for price to go into 1.5220 level and potentially even higher into 1.5300 level. So I'm looking for price to drop first and then move up further. So something like this. So that would be my bias for EuroCAD, looking for a pullback drop and then a further move to the outside. So bullish for EuroCAD. Euro New Zealand here. Euro New Zealand looks bearish. New Zealand dollar has been weaker amongst all the different commodity currencies. So bearish bias here, looking for it to drop further into 1.6680. So these are the commodity currencies. Some of them are driven by market sentiment right now. So just be careful with these one. Anyway, my bias is to the downside, 1.6680 here for Euro New Zealand. Pound New Zealand here, bias is bearish as well, looking for a further drop into 1.8930 level here. But we do have support into 1.9180 level. So if the price does not break below this, it can go back into the range because this has been range bound for quite some time. And right now we are pushing into the into the bottom, but we pushed into the bottom of the range back here as well, but then price went all the way up higher here. So it is range bound at the moment. So my bias is range bound, and so basically neutral. But if it breaks here, I'm looking for price to drop further into the next support and resistance level, which is at 1.8880. So that will be the next one to the downside. If it doesn't break the low here, then I'm looking for price to go back into the range. All right, so let's do Euro Aussie quickly here. Euro Aussie, huge move to the downside. Now, keep an eye on what Australian dollar does, because when Canadian dollar tends to, or all the commodity currencies tend to move in a similar direction. So keep that in mind, because if Canadian dollar starts to drop, Australian and New Zealand dollar may feel the impact as well. But Australian dollar is usually driven by gold. So let's go take a quick peek at gold here. What's gold doing? Gold had dropped. We had talked about if price breaks below this, talking about gold dropping here. So it did. It has pulled back now. So it's into this resistance once again. So what could happen here, because gold had gone up, it kind of kept the Australian dollar supported, but we could see this type of a move to the downside. So this here could just be a pullback in gold. So if gold goes up, Australian dollar tends to go up as well. They are correlated, positively correlated. But if it holds below, so for gold, if it holds below this support resistance level at 1306, it could drop, because that's just how our technicals tend to work. We see a drop, we see a pullback, and we see a drop, right? So keep that in mind. So for me, this one, the level here, 1306 will be very, very important, because if it goes on the other side, then I'll be looking for price to move to the next level, which is at 1325 or even higher into 1335. However, if it doesn't break 1306, then I would be looking for a drop, and the target would be 1263 to the downside. So keep that in mind for gold. And as gold moves, Australian dollar will move with it as well. So we were looking at Euro Aussie. From technical perspective here, biases to the downside. We could get a pullback into 1.5500 or even higher into 5520, and then a further drop here. First target would be 1.5380, and then below that, looking for 1.5250 level to the downside. So bias here for Euro Aussie is bearish. Pound Aussie here, this is bearish as well. We are into support. So if price does not break the support, like I mentioned before, that could mean that it could go back all the way. See how price had pulled back here? It could do the same. It could pull back into the high of the candle, and we could see a reversal this week. But if it breaks the bottom here, then I'm looking for price to drop further into 1.7350 level to the downside. So the commodity currencies, they are a little bit iffy at the moment. We could see move like that. So I would watch out for this pullback here. But from technical perspective, weekly candle here, I'm looking for price to drop. All right, yen crosses. Yen has dropped a lot. I was looking for this to drop on this day. I just hadn't expected this big a drop. So now we have, so this is the move. And these moves tend to be sentiment-driven moves, right? They don't tend to happen just on their own. But just to point out, it's just interesting. I was looking at this chart. Look at this pin bar here, and then drop. Pin bar, well, this is not the best pin bar, but we had nice pin bar drop. We had a nice pin bar here drop. So I really like the pin bar here and drop. Anyways, that was just an observation right on this chart. But from weekly perspective here, we're looking quite bearish. We are coming up into support here though. So that's something to watch out for. From here, we could get a pullback because that's quite a drop here. So we could get a pullback into 146.80 or 14700 level, even, oops, Yeah, that's okay. Okay, so we could get a pullback into 146.90, so 14700, and then a further move to the downside. Because we are into support, I would be a little bit careful with this. See how we had a nice strong candle close into support and then it reversed completely. So Japanese yen crosses can do that right now, especially if we start to see positive sentiment being created because North Korea and South Korea are talking and the US and Koreas are talking. That can create positive sentiment in the market, which means it could push the Wall Street up and equities could go up, and then the safe haven flows go out of safe haven currencies into more riskier assets, which means gold could drop, and like I said, Japanese yen and Swiss franc could drop. So just be mindful of that this week. But from technical perspective, this looks bearish. But this is the scenario that I would be concerned about. Same thing here. Price had dropped, but then we went up because market sentiment changed, right? So that's the concern, as I point out. But from technical perspective, this looks bearish into support, which means you could get a pullback and then a further drop into 142.50 level to the downside. Euro yen, similar story. We had a nice pin bar on the daily, big drop, and then price has been dropping since then. So this is a huge drop here. Now, again, same thing. We are right into support here. And if the price, we could see price pull back, especially if the sentiment changes here. So I would be looking for a pullback into 128.80 level, and then we can see a drop. So bias is bearish, but I am, again, being careful of sentiment. We have to be mindful of that. And I would look for a pullback into 128.80 and then a further drop. So bias is bearish for euro yen. Same thing for dollar yen as well. We have a bearish candle close here, railroad reversals. So I'd be looking for a pullback into this area and then drop further into 108.80 level. So looking for pullback into 110 and then a drop into 108.80 and then potentially further into 10800. Now, again, the concern will be if everybody is nice to each other, they're playing nice and they start talking, which means this could reverse and go up. So kind of like this. See, we had a bearish bias here and then price just turned around and went all the way up. So the sentiment driven, same thing here, the sentiment driven moves can unwind fairly rapidly. So just keep that in mind. But from technical perspective, this is bearish. Target would be 108.100. Aussie yen, similar story here as well. We have seen a big drop here. Aussie yen hasn't produced as big a drop because gold went up, keeping the Australian dollar stronger. But overall, we do have a nice looking bearish pin bar here, which means it could drop further. So just based on the technicals, my bias would be to the downside. But again, I would be mindful of this 82.20 level here, because if it doesn't break the low, then it could just reverse right here, right? So we need to see a break of the low and then a further drop here. So in this case, the target here would be 80.50 level, and this 82.20 level will be very important because we could see a pullback here. But right now it does look bearish and my bias would be to the downside just based on the technicals. Okay, we'll wrap it up with these two here. CAD yen, huge bearish candle close. So especially if the oil keeps dropping, this one could drop further here. So it is a bearish engulfing candle. We are into support. So that could be problematic. I'm looking for a pullback into 85.20 level and then looking for a further drop. So 82.50 will be the target to the downside. Looking for a pullback into 85.20 and then looking for a further drop for CAD yen. So bias is bearish. This one here, New Zealand yen, we are into support. Price hasn't dropped below this level in several months. So actually since October of 2016, we have not broken this level. Last time we tested it in February, but then as we can see, even though we had a bearish candle close here right into support, price pushed up. So this is just a general theme that is occurring in Japanese yen right now. We see a candle close here, then pulls back because of sentiment. So if it doesn't break the low, it can go back up. So keep that in mind. But just based on this, bias is bearish and looking for 74.80 level as the next target. And then in terms of pullback, I would be looking for a pullback into 76.30 level here. So the move like that. That's the kind of move I am anticipating for New Zealand yen. And if it drops further, second target would be 73.80 level to the downside. So bias is bearish on this one here as well. Any questions? That's all I have. All right, so we will wrap it up. That's all for today. You guys have a wonderful weekend. And to my friends, where it's a long weekend, enjoy your long weekend. And I will see you all next week. You're welcome. You're welcome, everyone. Bye for now.